Today we are going to look at 5 very stable high dividend stocks that just all happen to be based out of Calgary. Hold on to your horses, this one is like a high energy stampede. Calgary, a vibrant city nestled in Alberta, Canada, is the unrivaled energy hub of the nation, leading the way in sustainable and traditional energy industries. Renowned for its diverse and robust economy, Calgary boasts a significant concentration of oil and gas companies, making it a vital contributor to Canada's status as a global energy powerhouse. However, it's not just about fossil fuels. Calgary is also at the forefront of the green energy revolution, with a burgeoning sector of renewable energy companies calling it home. This, coupled with the city's stunning natural beauty with the Rocky Mountains at its doorstep, makes Calgary an irresistible destination for business, pleasure, and indeed, the future of energy. As a centerpiece of Canada's thriving economy, Calgary is an exciting hotbed for investment opportunities, particularly in the realm of stocks. Home to the second highest number of corporate headquarters in the country, the city houses a vibrant stock market scene, offering a plethora of investment options from its thriving energy sector to its rapidly expanding technology and renewable industries. Calgary's commitment to fostering a conducive environment for business growth makes it a particularly attractive destination for investors looking for both stability and innovation. This robust blend of traditional industry and cutting-edge technology, all anchored in a city with a well-earned reputation for economic resilience, positions Calgary as an indispensable axis of investment in Canada. Join the conversation. Let us know in the comments if you have ever attended the Calgary Stampede. Your participation is well appreciated. Don't forget to like and subscribe to stay up to date on future content, and a huge thank you for that click. I will drop today's list in just a moment, but before I do, I want to let you all know which qualifiers I used for this one. Obviously, the first qualifier is that all these stocks are based out of Calgary in terms of their head office. Also, they have dividend yields above 9% with decent payout ratios. In addition to all of that, they also have next to no debt. These companies are pretty awesome, so well, let's do this. Kicking off this list, we have Canoe EIT Income Trust with a ticker of EIT.UN. This stock is a channel favorite, and as many of you know, the fund is based out of Calgary. They invest in the energy, healthcare, and financial sectors. Definitely a well-managed fund with very little overhead, and that makes them a very attractive stock indeed. When we look at their data, their market cap comes in at $2.04 billion, and they've got a fairly average beta of 1.22. Their earnings per share comes in at 1.67, and when we look at their price to earnings ratio, it comes in at a nice little 7.60. Their return on equity, that comes in at 12.51%. Now, I mentioned about debt. Look at this debt. Their debt to equity ratio comes in at 0.05%. That's pretty darn close to zero, and that makes me kind of happy. When we look at their yield, they got a 9.252%. That's paid out monthly in the form of 10 cents per share. And their payout ratio is actually the highest on today's list. It comes in at 71.86%. And with very little overhead, let me tell you, that is extremely sustainable. When we actually look at their returns, their 3-year return on investment, that comes in at 45.92%. Adding in the dividends, we do get a total return of 86.73%. So that's not too bad. When we look at their 1-year return on investment, that does come in at negative 3.88%. Adding in the dividends, we do get back up into the positive at 5.08%. So far this year in 2023, they have a return on investment of negative 4.53% and a total return of negative 1.56%. Obviously, 2 of the sectors they invest in have been doing not so well in the last year, which explains why these numbers are down. But this is a company that their dividend has been reliable, and I do expect to see these numbers move back up as the market begins to rebound. Coming in at number 4, we have PHX Energy Services Corp with a ticker of PHX. Also based in Calgary, they are a provider of drilling services to oil and gas exploration and development companies in Canada, the US, and Albania. They used to provide their services to Russia as well, but they withdrew those services in 2022 in response to the Russian invasion of Ukraine. They have a market cap of $316.09 million. Their beta reflects a volatility twice as high, or maybe a little more, than the market average, and it comes in at 2.24. Their earnings per share comes in at 0.41. Their price to earnings ratio comes in at a nice little 9.80. When it comes to return on equity, we got 20.61%. That's not too bad. We look at their debt to equity ratio, comes in at 0.35%. Once again, anything less than 1% is pretty much bordering zero. When it comes to yield, their dividend yield, it comes in at 9.662%. That is paid out quarterly in the amount of 15 cents per share. Their payout ratio comes in at 35.45%, making it incredibly sustainable. When we look at their returns, their 3-year return on investment comes in at 508.82% for a total return of 579.90% when you factor in those dividends. When we look at their 1-year ROI, it comes in at 3.5% for a total return of 11.42% after those dividends are added in. That's also not looking too shabby. Their 2023 ROI has not done quite as well. They're currently sitting at negative 20.49% for this year, total returns of negative 18.57%. So that's a little concerning, but at the same time, when you look at a massive growth that they've had over 3 years, sometimes I wonder if part of that negative is just a little bit of a correction. So it may not be as bad as it looks. And once energy rebounds, this will more than likely get erased right off the board by the end of the year and be back into the positive. Taking our third spot, we have Alvopetro Energy Ltd with a ticker of ALV.V. They are based out of Calgary, and they are a Canadian resource company that focuses on the exploration, acquisition, development, and productions of hydrocarbons down in Brazil. In fact, about 100% of their revenue is actually sourced out of Brazil. They have a market cap of $302.11 million and a less than average volatility with a beta of 0.75. Their earnings per share come in at 0.13, and they've got a nice little PE ratio of 9.00. Their return on equity comes in at 47%, and they have a debt to equity ratio of 0.12%. Once again, we're really close to zero, and that's fantastic. When it comes to their yield comes in at 9.67%, and that's paid out quarterly in the amount of 14 cents USD per share. Their payout ratio comes in at a sustainable 41.86%. When we move to returns, their 3-year return on investment comes in at 285.19%. Add in those dividends, we get 322.36%. So once again, not too shabby. Their 1 year looks pretty darn good as well. 38.67%. Adding in those dividends, we get 48.10%. And that looks really good considering it was a bear market and there was a little bit of a fluctuation in the energy prices. So what about 2023 though? 2023, we see an ROI of 10.79%. Total return of 13.32%. That is really good when you're dealing with an energy-related stock. In our almost top spot at number 2, we have Cardinal Energy Ltd with a ticker of CJ, based out of Calgary. Their main activity is the acquisition, exploration, and production of petroleum and natural gas in the provinces of Alberta and Saskatchewan. They have made the environment and sustainability as one of the company's main pillars, which certainly reflects well on the future. Their market cap comes in at $1.07 billion, and they are very volatile, pretty much 3 times as volatile as the market, with a beta of 3.17. Their earnings per share comes in at 0.10, and they have a PE ratio of 5.30. Their return on equity, that comes in at 17.69%, and once again, really low debt to equity ratio of 0.05%. Their yield comes in at 10.827%, which is paid out monthly in the amount of 6 cents per share. And they've got a really great payout ratio of 19.79%. That is very sustainable. All right, hold on to your seatbelts for a second, folks. Their 3-year return on investment comes in at 1,339.58%. Holy banana bread. And we add the dividends in, it goes up even higher. 1,468.75%. I need a time machine now. Let's take a look at their 1 year. Now, with such a huge return over the 3 years, we kind of suspect that 1 year we're going to see a little bit of a correction, and we do. That 1 year comes in at negative 26.80% with a total return of negative 24.26%. Looking at 2023 in particular, we get an ROI of negative 7.87% and a total return of negative 6.27%. Nonetheless, these numbers are still staggering. Looking at these numbers, I'm not actually even upset about the 1 year or the 2023 being in the negative. This is a company that when we see the market return to normal and we start getting energy pumping again, we may see some interesting numbers with this one. Okay, in our top spot at number 1, we have Peyto Exploration and Development Corp with a ticker of PEY. Yes, you guessed it. They are based out of Calgary and a Canadian energy company involved in the development and production of natural gas in Alberta's Deep Basin. Substantial revenue is generated from natural gas and natural gas liquid sales. Their market cap comes in at $2.04 billion. They've got a almost twice as volatile as the regular market beta of 1.99, very strong earnings per share coming in at 2.29, and a very nice price to earnings ratio of 5.00. Their return on equity comes in at 20.41%. Once again, we have a debt to equity ratio very low of 0.42%. Oh, I love these debt to equity ratios we've been seeing here today. Let's jump over to their dividend yield. Their dividend yield comes in at 11.389%. That is paid out monthly in the amount of 11 cents per share. They have a payout ratio of 26.91%. This is simply awesome because normally when you get these higher yields, you also get some pretty high payout ratios. So it's nice to see these really sustainable payout ratios. When we look at their return on investment, their 3-year ROI comes in at 372.98%. Add in those dividends, we get 421.37%. When we look at their 1 year, we get a return on investment of negative 19.55%, total return of negative 13.79%. And for 2023, that return on investment is negative 13.94% for a total return of negative 10.71%. Once again, the downslide in energy is playing a big role on these 1 year and these 2023 ROIs. When I started researching the companies for this video, the Calgary part was not an actual qualifier. It just turned out that they were all from Calgary. So guess what? I went with it. These are really some good looking companies. And once oil rebounds, there could be some profits in addition to the dividends. So these are definitely, in my opinion, worth adding to your watch list. And then if you're interested in one of them or more, well, they're definitely worthy of some good due diligence. Keep the learning going. Watch my video on CPKC Rail or test YouTube's recommendation skills by checking out the video on the right. Your choice will decide the winner, and I will see you in the next video.